GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we break down crypto with the care of your mom cutting the crusts off your sandwich. I'm your host, Jay Hamilton, and today we're joined by the legendary crypto investor, Mando, to talk about his thoughts on the current market, why stocks have been outperforming crypto, and what he's looking at towards the future. Before we jump into today's show, I want to ask you all a quick favor. 56% of you who are watching this do not subscribe to our channel, and we want to celebrate our community. So right now, if you subscribe before the end of the month, you could win some free prizes. We're giving away Milk Road Pro, our crypto investing masterclass, and many more prizes. Check the details in the show notes. Deep out, sincerely appreciate all of you guys showing up for us every day. Before we hear from Mando, we just need to take a quick minute to hear from our sponsor over at Kelp Gain. Get ready because your reward farming game is about to level up. Introducing Gain, powered by Kelp, your DGen concierge. Gain is an automated vault launched by Kelp that maximizes rewards for ETH users. It offers one-click access to airdrops and points from leading L2s like Linea, Scroll, Karak, and more. Here's how it works. Head over to milkroad.com/Kelp Gain and spot airdrop gain. Get a complete overview of how your assets are deployed and the rewards and points you stand to gain. With just a few clicks, deposit ETH or SETH or liquid staking tokens into the smart vault. That's it. The best part, once you deposit, you're issued a liquid token, AgETH, enabling you to participate in DeFi on Pendle, Spectra, Lyra, Splice, and others. Gain is already live and you can go check it out for yourself today. Just head over to milkroad.com/Kelp Gain and get started. All right, we're back. Mando, let me start off by asking you just what are your thoughts on the current market conditions? It's a bit scary out there. There's a lot of chop, a lot of good signals and a lot of bad signals, which is super confusing. Where do you think everything sits right now?
Yeah, I think the main error that's been made is people assumed that this cycle would be like the previous cycles, or were told that it would be like the previous cycle. And that hasn't really happened. We haven't really had a classic altcoin cycle. In fact, Bitcoin dominance has gone up from about 52% at the start of the years to now 58. It's up about 20% in the last 2 years. And that's generally, you would see this sort of rally in Bitcoin and then we'll be going, right, we need to move into alts. We did have a meme coin cycle, let's say, but I think it's been very, very painful for if you've been outside of being a Bitcoin buy and hold sort of investor, and very frustrating as well. You know, I was looking at the chart yesterday and Bitcoin was at 61K on the 28th of February, right? Was it? We have not moved in 6 months.
Haven't moved.
And in that period of time, I think a lot of people have been chopped up. There's been a lot of depression that's kind of seeped in. You've seen ETH go lower, Solana kind of retreated from a high, and then most other altcoins are lower as well. So it's been a bit of a brutal 6 months, and it hasn't really felt like previous cycles by any means. That being said, you know, back in February on the 28th of back in the 28th of February, Bitcoin was at 61K. How euphoric was the timeline at that stage? It really felt like we could go so much higher. RSI was kind of overbought. Things were looking a little bit toppy. And then we did kind of top out, let's say 15% higher than that. Now you look at it, funding for futures is at an all-time low. Back then, you'd have these horrific wicks every single day, which would wipe out all this leverage. Now funding's really, really low. The stablecoin market, TVL, is up about 30 billion in that time zone. I think even higher, actually. And things like the Fear and Greed Index, the RSI are much, much healthier. So if I look at this market objectively and you take away all the emotion out of it, this is a market that could run. You know, if you start getting some momentum into Bitcoin here, that could very easily start pushing on to, you know, 80, 100K, and it wouldn't feel stretched. So despite the pain out there that it feels, it does feel like Bitcoin could keep going here. But it's interesting to know that I'm only really talking about Bitcoin there. I think a lot of other things have been tested this cycle, and I think they've been a little bit painful. I think that's understandable.
And I want to get into your thoughts on where you think this cycle could go from here. Will we have the more typical end to this cycle or another bull in the coming months? But before then, I just want to bring up a chart that I was looking at this morning. Love your thoughts on this. So this is a chart showing Bitcoin and the Magnificent Seven over the last 18 months. And showing percentage gain of each. Let me just zoom in so you can see here. But we've got NVIDIA up here at the top, which has just done incredible, up 700%, 763% over the last 18 months. Meta up 300%, Bitcoin up 254%, and then Amazon, Tesla, Google, Microsoft, and Apple all in ranging in the 75 to 100% up over those 18 months. So, okay, great. Interesting to look at. Bitcoin's done well in comparison, but here's where it gets really interesting. If I change the time horizon on this and I just look at the last 5 months, basically since we peaked Bitcoin peaked in March, then what we see is Bitcoin is the worst performing. It's down 12% over the last 5 months, whereas NVIDIA continues to rip, up 46%, Apple up 33%, Tesla up 32%, Google up 8%, Meta, Microsoft, and Amazon all ranging around 0. What are your thoughts about the fact that Bitcoin has been underperforming the Magnificent Seven and tech stocks over this time period?
Look, this is why it's been even more painful, because obviously there's an opportunity cost to be involved in crypto. And I think some of the drivers behind crypto, particularly more recently, have felt as though Bitcoin has been more a digital gold sort of asset rather than tech stocks. Although there is obviously an L2 infrastructure and some hope for Bitcoin as a payments infrastructure going forward, the bulk of the people who seemingly buy Bitcoin are more, they view it more as a digital gold. They don't want to touch it. It's a protection against inflation or debasement of currency. And some of the payment stuff has actually kind of been overtaken by some of the L1s. So in terms of like direct correlation to the increase, let's say, in financial tech, I would say that Bitcoin has become less correlated to those things. Regardless, I do think it's been pretty painful to see all these other tech stocks go higher, and people have been wondering, like, why do I own Bitcoin if Nvidia's up this much? And you kind of feel that Bitcoin's actually done the best out of all the other cryptos as well. So it's kind of been even more painful if you've been in the other things. That being said, like, we did have this left translated cycle. So you had some money come in from the ETFs. And then since then, we've actually seen quite a lot of distributions, whether from the German government, the US government, from Mt. Gox, from some of the other liquidations of protocols from the last 2 years, which seemingly came out of bankruptcy around that time as well. So we actually had quite a lot of supply over that period. But we're now kind of coming towards the end of that. Mt. Gox is starting to get towards the end of its distributions. Obviously, Germany sold. The US Bitcoin is still unclear if that's going to be sold or not. Maybe that depends on the election as well. There's some talk about, that being kept for some sort of strategic reserve. But we're getting towards the end of, let's say, the known pockets of supply that we all knew were coming. Mt. Gox has been, that's been a headline for the last 10 years, basically.
Forever.
It's been ages that people have been talking about this thing. So to get up through the other side of that again, and Bitcoin's at 61K, it's where we were at 6 months ago. You have to appreciate that Bitcoin is much smaller than the stock market and most other asset classes. It's a just over $1 trillion asset in a world where you get into the hundreds of trillions if you start counting all assets. So these sort of small supply technical things are relevant, and we did have a decent amount that came through. Seemingly, that's also why we rallied when we had those inflows that came in around the ETF. I think as we get towards the second half of this year, some of the broader macro trends around money supply, around liquidity being pumped globally into the system will become relevant, and some more of the micro stuff as well. So FTX is obviously going to be paying back just over 10 billion probably to customers, all crypto investors, and that's going to be in fiat. So you would expect that also a lot of that to come back into the crypto market. You could hopefully start to see the ETH ETF start to ramp up as the marketing around that becomes a little bit stronger. Same with Bitcoin. We started to see that there was due diligence around a number of different investment firms that needed to look at the Bitcoin ETF, and we're starting to see that kind of come to an end. Morgan Stanley came out with their wealth division. You'll probably see UBS, Goldman Sachs will come out with similar recommendations for their clients too. So the slow moving world of wealth management, insurance, pensions, they will probably start to become more aware of Bitcoin ETFs. And I think flows could really start accelerating actually towards the second half this year. And then who knows after the election? You could have a very, very positive scenario here where that opens up regulation. It opens up more ETFs for different asset classes. So for me, don't lose faith. I do think that they call it the banana zone really in crypto, but where things start to go.
You said it first, not me.
Yeah, things go parabolic. My guess is around the election. So like a week beforehand or a couple of weeks beforehand, we'll probably start to see some strength because some of the other longer term trends in crypto are very, very bullish.
Yeah, that's the funny thing about right now is even the tone of your voice in this conversation is everybody's a bit hesitant. Everybody's got this tone that's a little bit unknown right now, a little bit of what is going to happen over the next few months. But then at the same time, the number of things that you can stack up that are positive and make it actually seem much more bullish than it is, it's a bit of a funny time. Do you think that we will, assuming we see the banana zone, and as you said, macro indicators are looking great. We've talked a ton about liquidity ramping up, money printers coming on, that likely the Fed will increase the rates very likely in September and then hopefully continue to do that. So the US dollar declining. We were talking about the Dixie on yesterday's show, and that seems to immediately already having a bit of impact. And as you said, there's been so much movement into stable coins recently. And when stable coins get to these points, often people start to think, okay, now is it time to go back risk on? So it's like everything's teeing up, but nobody's really, like, is it just a sentiment thing? Like, why is everybody so hesitant right now?
Well, I think it hasn't felt like the previous two cycles. I don't think the onboarding has really happened this cycle. The onboarding has really come through the Bitcoin ETF, and that's where the majority of the flows are. But to a large part, away from being a store of value and for payments, which has been a slower cook, crypto hasn't found that product market fit that's just brought on millions of different people. For some of that, which I think is tokenization and potentially more broader avenues into payments, you will probably need some regulation in the US, which have really unlocked that sort of potential. But for now, we've kind of been trading meme coins between ourselves, and it's all felt like it's become more of a Bitcoin trade. It's become more of a, right, you own this because it's a fixed supply. It protects you against debasement, which we keep on seeing. It protects you against the issues with fiat monetary systems. That's like a slower cook, and people haven't come back in. Like some of the other things that we've hoped that would really take off, AI probably needs a little bit more time for like AI agents to be relevant. Gaming just has not really worked this cycle, or at least not to the extent that people hoped that it would. And some of the other applications just haven't really taken off in the way they would. If I'm honest, why would you need a decentralized public ledger? It's probably for things like payments, number one. And the other ones, just tokenization, I said, would be the other like big grail. But I think that could also just be enough. We're just going to have to accept that it's going to be a slower burn for those. You don't often need like public ledger for everything, basically. But I do think there's huge potential in getting to the tokenization of actual assets. Like I said, there's hundreds of trillions that trade basically a day, and that would also be the same for just generic payments, as we can already see with like the growth of stable coins. So I think there's huge potential in crypto. It perhaps hasn't been in the parabolic fields that we kind of hoped at the start, which meant onboarding hasn't happened. I do think we can get like those parabolic use cases with more regulation, particularly inroads into TradFi, and that's kind of a later cook. But for now, I do think a lot of hopes are pinned on Bitcoin being digital gold, and that going higher and dragging everything else higher. The only issue is it hasn't really translated in everything else going higher. There's been a few things that have gone higher, but Bitcoin dominance has really just gone up. Bitcoin's been the real winner this cycle. A lot of the top 100 are lower, and there's still that uneasy hope that do we get an altcoin cycle? I wouldn't be betting on it. Just what I look at in terms of why I'm bullish about crypto, a lot of it are the macro things that drive Bitcoin. And so far this cycle, they haven't necessarily led to other coins going higher.
What have you done with your positioning and your portfolio at this time when it is so unknown? Are we going to have a similar cycle? Are we not?
Yeah. So this time last year, I invest. I don't know if you've had OSF on this podcast, but yeah,
we have a few times. Yeah,
so me and him invest together. We went pretty big into memes around this time last cycle, and then we slowly started exiting at the start of this year. We're now primarily just in majors, so just in Bitcoin, ETH, Solana, and we dabble in very small pockets of meme coins and dabble in small pockets of other L1s. But generally, our portfolio is defensive, but we still see a lot of upside in it. So that's kind of where we're at. We've gone with a more defensive lean. I think that was one of the main errors this cycle, is that I personally think that even if Bitcoin goes to 100K, I think Bitcoin dominance probably stays around the same sort of level, which means most things are kind of a 2x-ish. Like, I think we probably could go to 150K over the next 18 months, but I also think that Bitcoin dominance could stay around the same level. So you've really got to think about the risk reward in some of those trades. Some of those, outperform, but for large part, if you think that Bitcoin dominance stays around the same, you've got to have a pretty high hurdle rate for a risk reward sort of trade. I think a lot of people just focus on the upside and they don't look at the downside of their trades. I think that's what people have been hurt on, just looking at the upside of, right, I'll own this alt because if Bitcoin does a 2x, this might do a 3x, but then you could also drop 50% the moment Bitcoin gets a cold. So we've been really more defensive this summer, starting from around April or May, and that has helped. That's really helped. We moved into ETH, which hasn't done as well, but Solana and Bitcoin have really helped our portfolios. And I think that's what we're probably going to continue until after the election or around the election. And then I think we might dial back into some more risky stuff.
Is there anything that you're watching that would lead you to go more risk on before the election?
For me, I'm of the view that Trump wins. But anything that would indicate that his chances become stronger, I think you get a more parabolic outcome there for crypto. And that's not a political statement. It just feels as though he's being very more direct with his positive stance on crypto and potentially the people that he would put in power in key positions there. If I start to see his odds go up materially again, I think that would be a bullish period here for crypto.
What about, there seems to be a narrative which I feel like you have been tapped into and we talk about a little bit on the show as well, which is around DeFi and these tokens starting to figure out value transfer and fee transfer back to token holders. It's something we've all dreamed about for so long, and we're sort of starting to see it. What are your thoughts around that narrative and any tokens that are catching your eye in that space?
Yeah, that's actually really interesting because it's something that we are looking at. So it's the one sector which we think that if we were to go back into the more risky stuff before the election, it would probably be in DeFi. Because for us, if you can push through crypto regulation quicker, you already have this move towards fee sharing rather than just governance tokens, and you have these protocols that could maybe start being used for real world assets at scale, you can start to get pretty bullish on some of these DeFi protocols. So even you can just kind of go with the tier one protocols, but then you could go into Solana, for example. Like, they've obviously seen a huge amount of DeFi versus TVL. You can go for a lot of the different like classic sort of coins on Solana, but the same on ETH. DeFi is the one sector. Like I said, 12 months ago, we looked at memes because we felt like those things would go most parabolic. As it comes towards November, I'll be looking at DeFi and thinking, right, if Trump wins this, then you can have a pretty positive scenario, or at least the risk reward on some of those coins can look very, very good.
I know you talked a bunch recently and made a trade around JLP, which is one of those DeFi tokens. Can you tell us a little bit about JLP?
Yeah, JLP is slightly different to all the other ones. So how the majority of perp protocols in this space, which is basically how you trade levered crypto in the space, there is a move towards decentralized perp platforms. There is a number of these you may not have heard of: Hyperliquid, DYDX, GMX, and Jupiter has its own. Jupiter, most of the others are on ETH. And how they have all worked is, instead of like a Uniswap pair where you have two-sided liquidity, you basically give liquidity to a pool. And that pool is made up of various different assets. In Jupiter's case, it's made up of 45% Solana, 10% ETH, 10% Bitcoin, and 35% stables. So you basically have pool there, which is 65% made up of risky crypto and 35% made up of stables. And people who use the protocol basically trade using that pool. So they'll be trading on a Sol USDC perp or a Sol BTC USDC perp, and that's how the liquidity pool is used. And you can either be using it for trading, or you can be a supplier of that liquidity. And I've been a supplier of that liquidity. You own a token which basically owns the whole pool, or owns a partial share of the pool. So JLP is the token which basically has a risk profile which is the equivalent of 65% of these risky coins, 45% Sol, 10% Bitcoin, 10% ETH, and 35% stables, and moves up accordingly. So if, for example, those coins are all up, let's say Sol, Bitcoin, ETH would all be up 10% one day, this would be up 6.5%. let's say, assume the stables haven't moved. That being said, you also get on top of that all the protocol fees from trading of that pool. It's been roughly like an APY of around 50 to 60% average over the last 6 months. You can bring it up. As a chart, it has one of the best Sharpe ratios in crypto, because the other thing is, generally on the down days in crypto, you get a lot of liquidations. This is one of the main things you will ever see in crypto. People will talk about, oh, this is how much got liquidated this week. And you tend to find that those liquidation fees all go back to the pool as well. So it doesn't really have down days. You'd be amazed that it literally just looks like a straight to the right chart. And the down days, even for Bitcoin, ETH, and Solana, like it doesn't really happen for JLP. So it's a good thing to own in terms of volatility. I don't really focus that much on it, but it has become a very, very large bit of my portfolio. So look at that chart. It's up more than Bitcoin, ETH, and Solana this year. Started the year at 1.7. It's now at 3.15. So it's up probably about 70%. Despite only being 65% risky things, it's beating them all in terms of overall performance. And how these fees are given back to you, just to be clear, it's not like your classic LP where you would get like a separate stream of payments. It's just added to the pool. So you actually only face capital gains. You don't face income tax. Which can be relevant for people if you're looking at it from a tax perspective. Like this would be, the gains are basically reinvested essentially. So it's all capital gains.
What did you do on your JLP trade? Did you trade a bunch of, like, did you evenly trade Sol, ETH, and Bitcoin to get into this, or did you make get out of one?
It was mainly, I moved ETH and Solana around April time. That's what, and I've held it since then. And in that time period, I think Solana and ETH are both down. And you can bring back up that chart, and this thing's up. So it's a good thing to hold over long term. There's obviously some DeFi risk around all those things, but at the same time, it's a easy long-term hold for me.
Just before we wrap here, Mando, when we look at this cycle, the possibility is that we do hit the banana zone towards the end of this year. And then when you zoom out, this actually kind of does look like a normal cycle again. Do you think that's the likely case, and that we're actually just in this point where this happens in every cycle when we, have all the fear that comes in? Or do you think that we'll look at this cycle at the end of it and it will truly be different?
It's a little bit wary to be like, oh, your altcoins are going to rally next year. Like I said, I am bullish about select different things. Like I do think DeFi under that exact scenario of a Trump victory, I think could be a nice little sector. I still feel the most safe right now in the more defensive stuff. So it's Bitcoin, Solana, ETH. I feel as though out of those, Bitcoin still feels like it has the strongest narrative out of all three of those. So I'd be unsurprised if Bitcoin dominance even goes up to 60% before the election. And then maybe it kind of comes down after that. Who knows? I guess what I'm saying there is I can't guarantee it's going to look like the other cycles. I'm going to guarantee that Bitcoin's going to be higher in the next few years. But I guess that's what people are feeling in crypto right now. It's become a question of, we need to find the killer app that makes all these L1s, which are more based around the use cases of crypto. They need to start getting real scale, real applications that people come and use them on. And that may require a little bit more time, or we just haven't found it yet.
Mando, thanks so much for your thoughts. Everybody listening in, if you do not subscribe to Mando's Minutes, I highly recommend that you do. A great way to get the news download very quickly on a daily basis. It literally only does take minutes. So
yeah, love from the best from you guys.
Yeah, the name is accurate. We'll put a link to that in our show notes. As I mentioned at the top of the show, if you're not subscribed to our channel, please subscribe now, because you could win some great prizes this month if you subscribe by the end of August. Remember, none of this is financial advice. Investing in crypto is risky, and you should only invest what you can afford to lose. Thanks so much for joining us. Have a wicked awesome day.